Hey guys, November 3rd, Election Day. Couple things. We've been campaigning about the human trafficking that we are looking to try and continue to keep donating to and keep trying to fueling those who are doing something about it, the operators with boots on the ground. Because many of us, we can't do that, right? So we want to be able to participate in some fashion. Last month, we closed 145 transactions for all you investors. So thank you again for the trust. I know it wasn't easy with a lot of the things we had to do. And a lot of people feel, in fact, I get a question all the time. It's like, why am I on the back burner? It's like, you're on the back burner. It's just the line is so big and so long, and we're just chunking away at everything we possibly can to make sure we get everybody done in the order they're coming in. Sometimes there's massive priorities that hit. Sometimes there's massive issues, and we have to take a bunch of resources and dump into it. But we're doing the best we can to keep moving it. Hired 3 more people this last month, getting them trained. We're going to keep trying to move as much weight as we possibly can. So we appreciate the trust, the patience. Those with the refis, I know it's going to get frustrating, the refi situation. Everybody in the industry is backed up in that. So with that, with our campaign, that puts out $7,250 that we can donate to the cause. Any investor on here, if you've got a closing that's happened for you, if you're watching this, please go to the website, aaron.chapman.com, scroll down to it's an obvious spot, click on the donate, $50 for every transaction you close, all we're asking. Participate if you feel like you should. The one thing about it is if you're watching, you can't ever say that you're not aware of the situation now. We're going to get more information out there to you guys so you know a little bit more about it, but go to Amazon Prime, watch Operation Descent, know more about the group that we're supporting. So let's get into the markets. Another question I keep getting asked, what is my anticipation with the rates with the election? Today being election day, I can't really say what's going to end up happening. I know that there's some fear on both sides that massive stimulus is going to come into the markets. That always has an effect. The other thing is we also know the Fed is continuing to keep pouring capital into the mortgage-backed securities, try and settle out some of the markets in the economy over the next couple of years. So we have that going into 2001 and 2022. At least that's the claim. We know policy changes, minds change, things that happen. There is big fear. If we end up having a Biden presidency, we're going to have an economy completely shut down. So let's look at what's gone on this last little bit. Yesterday, big gap up opening. Market opened way up here, 104.66, and that was our high. But then we saw it drop all the way down. 104.41 is where we dropped out, and then we end up settling 104.47. What does this mean? Well, in reality, where it opened up like that, there's so much volatility, we didn't see a whole lot affecting pricing. But when you see where it's settled, look back here. We talked before about these 2 trend lines. We talked about the 200-day moving average and the 10-day moving average converging, and it's going to force something one way or the other. Well, look how it's forcing it above both those trend lines, which is a very, very good bullish sign for the mortgage-backed securities. Right. If you look today, it's tried to go down, test some of these this support lines, keeps coming back up, and it's staying above. See the top of that green candle? That's where we're staying above this trend line. Now, if we continue to close that way, now we're going to get squeezed between, the 30-day, and then getting squeezed between the 30-day and that 200-day. So let's see how that goes. See if that 30-day creates some sort of support for us. We're watching how the technicals are working. These markets are getting squeezed for it to decide which direction it's going to go. And if it continues to trend that direction, which would be a very, very slow trend, there is anticipation, since this is where our peak was. Let me see if I can get that a little bit better mark here. So our peak, right around August 10th, the first part of August was the peak in the market. So if we get in here a little bit more, see if I can if that pops up here. So yes, August 10th was the peak of the market. It's closed at 106. Where we are today, 104.48. So that means somewhere right around a 105.2 is what I'm thinking might be where we go back to if the market continues to trace back what it likes to do. It likes to trace back about 50% of its losses once you find a bottom. We were scraping this bottom for a while. So I'm thinking, this is just my thought, we could reasonably see it work its way back to the 105s. But also that's based upon what the technicals are within the market. We're not sure what the interest rates will do when we're talking about a new a new presidency and all that kind of stuff. So we don't know. Could be a continuation of what we've already seen. Plus, we're still dealing with the economy, the effects of the economy on the coronavirus and record unemployment and all these things. But then we're also, who knows what's going to happen? We have a completely different system with a new president. It's just, I say it's just damn frustrating to even be talking about this. I don't give a damn who goes into office. They should all have the economy and at least the benefit of the citizens of the United States. Our borders within should be something that should not be affected, which should be situation normal for us going forward, continuing to improve our lifestyles. Well, not so much even improve our lifestyles, but in reality, just having the rights and the abilities to continue to do what we've always done. So for us to even worry about that, what's going to happen with taxes, what's going to happen with all these other policies, is just asinine. It shouldn't even be the case. But this is where we are. This is what we've got. This is what we've got to worry about. So if you don't like it, change it, raise hell about it. We'll see where things end up. I'm hoping that the trend continues, that we found that bottom, that we slowly eke our way back up into the 105 mark. We go up there. Rates will continue to improve a little bit. How much? Kind of hard to say. I mean, we were talking about massive improvement. Rates are already low as hell. And real estate investors, it doesn't matter what the rate is. It really doesn't matter. As long as you've got a cash flowing property and somebody else is paying for it and you can keep it rented, you're making hundreds of % return. Remember that. It's way beyond what you really anticipate to be based upon the metrics you're looking at. You're looking at cash on cash, looking at cap rates. You're not looking at all the metrics. And because of that, you get really caught up on what's going on in the rates and try and dictate your life and your investing based upon what the market's going to do. Why don't you just move forward and find a really good property with a really good group of people to work with that stays reasonably rented and continue to press forward and expand your business as you see fit for yourself. Thank you for the trust and for always watching.